Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. Guys, this stock is down over 10% so far to start 2025. That yield is soaring up to 4.3%. It has a perfect dividend payout ratio as well. Who is this stock? You know what? We're going to tell you in this video right now.
Smash that subscribe button. Give us a nice thumbs up. Let's get to 30,000 subscribers this year. Make some noise for the dividend investing communities as we help you invest in 2025. So, Bert, this stock down 10% with just 7 business days, or you can even probably chop off one. With Jimmy Carter's funeral, RIP. So you haven't had too many business days to trade in the stock market, and this stock is already down 10%, and they're over $10 billion in market cap.
That's absolutely right, Lanny. So who are we going to talk about here? It's so good. It has to be Smuckers, ticker symbol SJM. We've talked a lot about consumer goods on this channel here, Lanny. We've talked about Pepsi. We've talked about Hormel a few weeks ago. I've talked a lot about Mondelez. I've talked a lot about it. Geez, I am. I'm loving it. Today we're going to talk about Smuckers because it is down 10%, because that yield is above 4%. And Lanny, I always personally have a rule of thumb of Smuckers price over the last few years. When Smuckers gets below $100 per share, my eyes are going like this. And they're
buys all the peanut butter and all the Folgers coffee he can.
Scoop it up, feed me. And you know where I'm going to put that Folgers coffee? Dividend Diplomats coffee mug, everybody.
Get yourself a nice DD mug. Right there's the shop links and below, guys, so you can be dividend investing every morning when drinking your coffee. So, Bert, Smuckers, man, they had a big acquisition last year with the Hostess company, adding in some more of these healthy snack brands. And we all know the headwinds with RFK Jr. coming in and trying to pull back all the bad stuff within food. Obviously, they have a ton of other snacks underneath their portfolio, But I would argue, peanut butter jelly, that's a very solid, well-balanced sandwich right there.
It is. And they also have the pet food division, too, which let's not forget about their massive pet food division that also helps prop it up.
Diversification there.
Yeah, Milk-Bone, Meow Mix. They have the pepperonis. So they got a lot of stuff to your right to help diversify. Yeah, so while you're facing the headwinds with Hostess and some of those snacks, people are still buying their peanut butters. They're still drinking their Folgers coffee. They're still feeding their pets. They're still taking care of everything. So Smuckers might be this perfect little consumer food stock, Lanny, that can help insulate you a little bit from what's going on. But overall, I think what would be helpful, too, is let's just take a look at what's going on with Smuckers over the last 5 years when we're looking through some of those financial statements, looking at the revenue, gross margin, net income in the debt, Lanny, and just see, does anything kind of pop out from an overall trend perspective that might cause some red flags or concerns?
I know they've done some buying and selling within the company. So, you're not going to see a pure revenue growth because of the sales that they've also have done. They've sold some pretty big branded snack companies within their portfolio. So revenue top line has been pretty flat. Costs have actually been very flat. Margin overall has gotten better, but still flat when you compare it during the COVID time periods. But Bert, the unquestionable item has to do with the balance sheet.
Yes, you go over to the balance sheet. You go over to the liability section. It's that long-term debt. Back in April 2020, they had $5.4 billion of long-term debt. They had managed it down, gotten it back down to 3.5, up to 4.3. But then that Hostess acquisition happened, Lanny, and then it jumped up to $6.8 billion. So they took out a lot of debt to fund this acquisition with Hostess. That's going to be under some pretty heavy scrutiny right now as people look to make things healthier, as they look to clean up some of the snacks, which are also going to anchor and fight their way through the expense side of it, Lanny, because I'm sure getting healthier isn't going to be cheaper for Smuckers. And I think that's the piece you have to keep an eye on.
Yeah, it won't be cheaper, and debt is still costly. They've also been issuing more shares, but the share trend was ending downwards, and then with the Hostess, that also kind of popped back up. So you got debt and more shares being issued, which is going to hurt cash flow, net income, and earnings per share. So, guys, that is Smuckers in a nutshell. But we got to run through the DD stock screener, focused on the price to earnings ratio less than the S&P 500. Dividend payout ratio, is it less than 60%? 3, history of growing dividends, hopefully at a rate above inflation. What's that dividend yield look like? Bert, let's dive into those metrics, brother.
All right, the price is closing. Excuse me, everybody. Sorry, I'm still getting over my sickness. Almost done with it, hopefully. So price closing as of January 10th. Yeah, never done. Price $100.90. Earnings per share $9.89. Almost below 10. It's a PE ratio of 10.2.
Wow. There it is, guys. And their dividend on the overall yearly basis, $4.32, looking at a payout ratio below 44%. So currently relatively safe. If somehow earnings were still cut in half, that payout ratio would go up to about 86%, and the PE would only be at 20. So not sure we expect earnings to be slashed down that much, but you never know.
Yeah, you never know, and that's the important thing. Their 5-year dividend, excuse me, 5-year dividend growth rate is 4.35%. This year, they should become a dividend aristocrat. They've increased that dividend for 24 consecutive years. One more raise. One more raise. They should get it. I'm not going to say they're going to have large dividend growth, but they're probably going to be in line with their average, maybe a little bit lower. But with a payout ratio of 44%, there's more room to keep increasing that dividend, even if that dividend increase is small.
Nice. And guys, their yield, as Bert said in the beginning of the video, 4.28%, well over 4%, actually closer to 4.5% than it is to 4%. That 5-year yield is 3%, so they're yielding well above 1.15% above that historical dividend yield right now, guys. Man, the year-to-date, again, down 10%, down 21% since last year, actually down 3% over the last 5 years. Bert, what's your price point where you're looking to possibly add, or are you going to stay away from this snack and consumer brand company?
I'm not staying away. What I like with Smuckers compared to some of the other stocks we featured here on this channel, and we've talked about, I love the diversification among sectors within there, and they dominate in the sectors they are in. Like Folgers is still a top-selling coffee, even if some people don't prefer the flavor. Smuckers jelly, Jif peanut butter, even the milk bone, the meow mix, going through it, even the Hostess stuff. The snacks are the snacks, but there's some of the dominant snacks within the sector. Smuckers piles into brands that do really well, and that's what I like about them. So I'm very interested in this price right now. Couple that with a low payout ratio, they should be able to absorb any cost increases that are going to be needed. That are going to come as people scrutinize this sector even more.
All right, there you have it, guys. Are you buying Smuckers stock? I'm currently in a wait and see, because if Pepsi's coming down as much as they are, I feel like Smuckers has a little bit more room to go down as well. But let us know if you guys are buying Smuckers stock, and what other stocks are you buying here in 2025? If
you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you are either with us or you are against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.